Good morning, boys and girls. Welcome to the Flow Show. Here we are yet another day. The day after the night before, Mr. Powell, and we have Queen Suntan to look forward to. We can all sit there clawing our eyes out as she waffles on. Looking forward to it. Love these weeks. Worst part of the week is going to be when she's finished and the floodgates open and we get every ECB member from here to Timbuktu coming out and telling us chapter and verse what went on and what they think. So enjoy the quiet hours while they last. Getting good kips, Kay?
Good morning, Ryan. Good morning, everybody. I sincerely hope that the ECB will rearrange their language a little bit as well, like the Fed did yesterday, and especially shorten that press conference.
Oh, yeah, two hopes. Two hopes they'll shorten that press conference. But anyway, I enjoy them really. Well, for the wrong reasons. I spend more time during these press conferences taking the piss out of what's going on than I
Correct.
do reporting any decent news.
Mm. Yeah,
but
yesterday was the same. He could have stopped after 5 minutes. After 5 minutes, he said everything what he had to say, really.
Yeah, exactly. Exactly. Right, well, we'll go over what he did say because there are some important notes to take from that. But we'll start off with the news as always. Lots of meetings going on at the moment, as you might expect. Japan and US trade ministers or finance ministers had a meeting, virtual meeting, and they've agreed to closely consult on Forex and other matters. Mr. Shiba has booked himself in to meet Trump next week, 7th of February. I'm not sure if he'll dust down his golf clubs. I did Google to see if he was a golfer. Apparently, he was a golfer in his younger days, but then gave it up for work. So maybe he better get on the old driving range and try and repeat what Abe got up to with Trump. But anyway, that meeting due next week. BOJ Deputy Governor Hamino says Japan still has some distance from positive real interest rates even after the hike. Says the bank continues to support the economy with accommodative monetary environment and will raise rates if the economy prices move in line with forecasts. So sticking to the script of that one. Bloomberg highlighted something from the Bank of Japan that I think sort of half went under the radar from the BOJ meeting, that they're going to be taking off around $500 billion equivalent off their balance sheet. They are have been ending, will be ending various lending programs and whatnot, all part of their easing measures. And when those programs finish, it will help reduce their whopping great balance sheet by around 15%. Now, this is something that seemed to give dollar yen a little kick down, or yen pairs a little kick down overnight. This is part of the other equation. It's one thing normalising policy, raising rates and whatever. It's another thing trying to get rid of over half their bond market on the books. But they're making moves towards it. And 15%, Kay, that's, for them, that seems quite a chunky amount.
Yeah, that is a chunky amount. I think we all have to put it in that one big context of first of all normalization, and then with half an eye on what those whales are going to do, because they could take it off if the whale. They must have already been talking to each other, right? Because they remember last year they were going to make some consultations with market participants to see what would the impact be of normalization of policy, and so they must have had some information there that the whales were probably ready to fill that void. But yes, it is a chunky amount. We still have to take into account that they own a much bigger part of the bond market than the Fed or ECB or whoever else ever held of their own market. So, but it is a step in the direction that Ueda has taken and that he was supposed to take. So, yeah, I guess we can say it's quite a move for their size and side, at least in for Japan. This is a pretty decent move.
Yeah, indeed, and we should remember they're not going to be in the same boat in terms of speed of reducing
No.
QE or embarking on QT. I mean, one of their options because they hold, I think the balance of their bonds at least are fairly short duration, so they have the option just to let them run them off, which means they don't suffer any losses because obviously with yields going up, the value of bonds has gone down, so their losses would be
Apparently,
unimaginable in one sense.
yeah. Of what I read, there's a lot coming off for 2028. So by 2028, their balance sheet will have a different look.
Yeah,
Uh,
pretty much. I think
if
their average duration was about 7 years or something.
Yeah, because I mean it's I don't have the numbers in front of me, but everybody can look it up what they do on a monthly basis. They have been scaling back already, bits and pieces over the tenure of Ueda. So yeah, they are continuing. But as we've already been saying, it's Japan. It's a big slowdown of QE instead of real QT. Let's put it that way.
Yeah, yeah, exactly. Right, over in Australia, and the expectations continue to change. NAB, National Australia Bank, the latest to move their cut expectations to the February meeting versus calling for a cut in May. They now join ANZ, Westpac, CBA in touting the Feb meeting. So it does put a little bit of price risk on if they hold. Their meeting is the 18th of Feb, so a couple of weeks to go yet, but we know where everyone's sitting for that meeting anyway. Over in the UK, Chancellor Reeves was out and about spouting off about grand plans. She's going to be putting together a planning and infrastructure bill for the spring, so next few months, to try and boost the economy. Says we are seeing some encouraging signs in the UK economy, which is a bit of a change of tone because her and her mate Starmer have been done nothing but badmouth the UK since they got in the door. So they've obviously realised a couple of weeks ago that doing so isn't very good from the investor perspective. So she's going ahead with all her plans and whatnot. She did announce formal backing for expanding airports, runways, and whatnot over here. Take Heathrow as one example. She expects that to be up and running by 2050. We will all probably be driving flying cars by then by the time she gets it finished. Of course, they'd have to go through a 9 gazillion page environmental study before they can even shove a shovel in the ground. I don't hold out much hope, but anyway. UK mortgage approvals came in nice and healthy this morning at 66.5 thousand. Consumer credit numbers were out as well, which I keep an eye on just to see who's doing what. Credit growth, nothing much to write home about. Consumer credit rose to 1 billion from 0.9 billion. Credit card spending, or credit card use, shall we say, rose to 0.4 billion from 0.3 billion. Still running very, very low. You might have expected that time of year, holidays, Christmas, that sort of thing, to maybe see an increase in borrowing on the old plastic, but that has only been minimal. One thing I have noted is that credit growth looks to be declining in the UK, which on one hand isn't bad. If people are being sensible about their money, don't want to get into debt, then obviously they don't go out and borrow. So sensible side of things, that's good. The negative side of things is that borrowing obviously goes into the economy. So you do need an element of healthy borrowing to help your economy. So lack of borrowing can mean an impact on the economy. So that's something that the Bank of England might be keeping a close eye on, because obviously cutting rates can encourage further borrowing. So I'm always banging on about borrowing and whether people are getting stretched. Doesn't seem like they're getting stretched, but the opposite is happening. They may not be borrowing as much as before, which, as I say, can have a negative effect on the economy overall. But that's one to watch moving forward. Over in Switzerland, they've ended their EU ban on stock markets. This was all to do with a bum fight that happened a few years ago, where the EU didn't offer equivalence procedures for Swiss stocks to trade in Europe and vice versa. So the Swiss government put a block on everything. You can't trade Swiss stocks outside of Switzerland, and you can't trade European stocks inside Switzerland. They've partly removed restrictions. So now European markets can trade Swiss stocks, list Swiss stocks. However, because there's still no equivalence agreement in place, European firms are not allowed to trade European stocks on the Swiss exchange. The UK will be looking at this one closely as well after Brexit and whatnot. Data out from Europe. Spain flash CPI went up. CPI there 3% versus 2.9 expected, prior 2.8%. The Eurozone measure also going up higher than expected by a pip. Difference is with this and higher inflation is that Spain has a better looking economy if you compare the likes of Germany that doesn't. Speaking of Germany, the government confirmed what we posted or what I noted last week, that their growth forecasts are coming down 0.3% now expected for 2025 from 1.1%. You can see why. German GDP coming in at minus 0.2% quarter on quarter, minus 0.2% year on year, workday adjusted down 0.4%. Italy, on the other hand, missed expectations for their Q4 growth, but they still posted a positive number at 0.5%. Yet again, they're beating their northern relations, shall we say, Germany, showing better. So the southern state, northern state divide is still evident there. Eurozone GDP as well came out. Where was it? Down there, 10 o'clock. And coming in flat on the quarter, up 0.9% year on year, missing expectations slightly. But again, some of the other states doing the heavy lifting there, the likes of Spain and Italy and others. Kay, bit of a shite year for Europe. They're going to be hoping for better this year. Are they going to get it?
Can you ask me that on the 31st of December of this year, please? Now, in serious, I mean, everything that's going on right now is, first of all, it does not seem that we see any serious improvements right now. But a lot will, of course, depend on what's going to happen once Trump signs or doesn't sign too many tariffs. At one stage towards the end of last year, there may have been some really shy green shoots, but they have been completely trampled already, and it didn't. We don't see any confirmation right now, and as we were already talking about it, it may be that we need to wait until those German elections are over, until also because the French budget talks are collapsing again, and until those two get their acts together, it's going to be very difficult to see how and where Europe is really going to stand up properly. There may be shoots, and which is usually when an economy starts to turn around from the abyss, or vice versa, from outperforming and then starting to slow down a little bit, even with decent numbers. You are going to see a bit of a move in the currency because the people are living on hopium. But as far as we are right now, I'm not seeing it, Ryan. I'm industrial production, manufacturing production and stuff. They are not yet really showing signs of rebounding materially.
Yeah, absolutely, and it's obviously going to be a consideration for Madame Lagarde later, as we will know.
Yeah.
Right, coming over to the data we had out yesterday, states and whatnot. One thing we got coming out was the advance trade data from the US, and not looking overly hot. As you can see there, deficit jumping by around about 19 billion there. Exports were down 4.5%, imports were up 3.9%. So as much as that number looks bad, I think a lot of that is due to the tariff front running that we've seen in some of the other data, things like PMIs and whatnot. So I wouldn't be surprised if we're just seeing a bit of noise from that in this type of data, because that's quite a big jump in the deficit. And given those import-export numbers, that certainly explains it away somewhat. We had the BOC cutting rates by 25 as expected. They also had a little surprise by cutting their deposit rate by a further 5 pips to 2.95%, or cutting it 5 pips under the main rate to 2.9%. That kicks in today. They said they are going to end QT, which comes across as a little bit dovish, because they said they will restart asset purchases in early March. They will begin gradually so that the balance sheet stabilises and then grows modestly in line with growth in the economy. So a bit of a dovish move one could take from that. Overall, there was no further real indications about future cuts. They are going into or could be going into a pause, or a data-dependent pause, shall we say. Again, something that pointed out, say, in the statement, saying that the cumulative reduction in the policy rate since last June is substantial, i.e. we've done a lot since June. Maybe now it's time to slow down a bit. But then they caveated that by saying tariffs basically throw everything up in the air. So until they know what happens with that, anything can happen. So a skip, pause, whatever you want to call it, might just be temporary while they get over that hump. A lot of notes about potential tariffs and trade fights with the US are factoring into their thinking. Bank of Canada's, before that, they did raise inflation forecasts, another reason why to slow down on cuts, but they did lower their growth forecast. Macklem was out saying the divergence with the Fed has not constrained policy choices. Said Canadian dollar depreciation will start to have some impacts. The bigger the moves in CAD, the more we're going to have to take those into account as we set policy going forward. So a little bit of a warning to the moves in FX. It says he expects to be focusing more on supporting growth if downward pressures in inflation caused by tariffs come through faster than upward pressures. So again, that's the dovish slant there. It says rate guidance language was removed because there's a lot of uncertainty. A different type of pause, perhaps, Kay, not one on so much on the economy, but on the unknowns, shall we say?
Yeah, absolutely, Ryan, 100%. Preparing for the for what may be coming, especially I would say this ending of QT, already planning to restart a small form of QE later on. That is really preparing the terrain for needing to support the Canadian economy if so would be needed due to implementation of tariffs or trade wars coming. So that's exactly it. They are just preparing and prepared to support if needed. So that's really the main message that we got from yesterday's Bank of Canada.
Yeah, absolutely. Onto the Fed, they left rates unchanged as expected. They did remove a pretty significant line in the statement, which Powell brushed off afterwards. In their last statement, they said that inflation was making progress towards their goal. That came out. Okay, so that was the first big change there. Powell said there's no need to be in a hurry to adjust the policy rate. Reducing policy restraint too fast could hinder progress, and doing it too slowly could unduly weaken employment. Policy stance is very well calibrated to balance their achievement of their goals, said the removal of that inflation progress line was just a language cleanup, not indication of any policy. Longer term inflation expectations appear well anchored. That was a bit of a brushing under the rug, the higher inflation expectations we'd seen in all those surveys. Says expects to see further progress on inflation. The rate is still meaningfully above their neutral rate, and they don't need to get 2% inflation to cut rates again. Talking about what's happening in jobs, and with one eye on Mr. Trump's government workforce slashing, says a spike in layoffs would cause a quick rise in unemployment due to low hiring rates. And he was questioned about a possible cut in March, and he just repeated they are in no need to hurry. He also blew up tomorrow's data. We get PCE tomorrow, but he decided to give it to us today. Said that PCE will be rising by 2.6%, or has risen 2.6% in the 12 months to December, and core PCE will be up to 2.8%. So we can all go down the pub tomorrow for that data. Traders have kicked out their next rate cut to June, looking at rate futures. Overall, Powell was Powell. He did exactly what we were expecting. He went from one side to the other, hawkish to dovish, bullish to bearish, and ended up right in the middle, and no one's none the wiser how long this pause may go on for. Perfect job, Kay?
Oh, Powell.
Yeah.
We said it before. That's what he gave us. That is like, just keep guessing, guys. And also, yeah, that leaving out the remark on inflation going towards the goal was taken small as hawkish, but I think it's a way of also saying that. I was thinking like it must be a wink towards Trump, this one, telling him like be careful what you do, because we are not there yet for cutting rates massively. But I think he just left the door open to anything. They are in, and it's probably going to filter through into the CCP as well. Everybody is in wait and see mode to know exactly what's going to happen with international trade, what's going to be the weight on global economies and things. And yeah, I mean, we can see it from the moves that we had during the meeting, and you can compare both the Canadian and the FOMC. The moves that we saw were minor compared to other meetings that we had in the past, and potentially the next meetings. Those will probably be much more active, and the market may react a lot more to what's to come. So, yeah, nothing is set in stone there. Yes, the market pushes back towards June. But May wasn't really a done thing yet either. It's just pendulum swings right now, and we go back into the waiting room.
Yeah, I think that's the main thing. You know, as I've been saying, these early meetings they set the scene for the months ahead, and the market now, you know, thinking, oh, we're not going to get anything until June. That pretty much, you know, bar watching the data, of course, that sucks the life out of everything. You know, the next Fed meeting, which will be a projection meeting, is going to be a dull affair, you know, unless we see any big swings in the data. So, yeah, he seems to have bought himself some time, and the market's at the moment's happy with that, and he's going to move on to other things. But yeah, it doesn't bode well for us in trading it unless we get some big data swings. Of course, Mr. Trump popped up not long after. He would have probably popped up sooner, but he had a shindig last night. He said that the Fed had failed to stop the problem they created with inflation, and that he will do it by unleashing American energy production, slashing regulation, rebalancing international trade, and reigniting American manufacturing. Booyah! He He said the Fed had done a terrible job on bank regulation and that the Treasury is going to lead the effort to cut unnecessary regulation. So, as I said, the moan up was probably the most expected thing from the rate decision. Mexico's Shine Bomb says she doesn't think the US will impose tariffs on Saturday. As you can imagine, there have been some meetings going on. We had Canadian Foreign Minister Joly meeting Secretary of State Rubio yesterday. No real details out from that, apart from usual platitudes on working together and looking forward, that sort of thing. But it just shows that probably underneath the surface, there are calls, meetings, stuff going on. So we still face this tariff threat for Mexico and Canada, but never rule out or don't rule out getting a headline at any point saying that they've agreed to this, that, and the other, and that those tariffs won't go ahead, be it one, other, or both. So the clock is ticking. We'll have to wait and see where we're at come the close on Friday. Meanwhile, Trump's plan to shed workforce at the government is facing problems. One of the government unions, worker unions, is going to sue to block Trump from doing all that. So the bum fights have started. Now, we've also had the US Commerce Secretary nominee, Lutnick, at his hearing, and he's coming out as a bit of a hardliner. He says he prefers across-the-board, country-by-country tariffs. He's going to vow to be very strong on chip controls, particularly to China. Says the US needs simpler tariffs because he says there's too many exemption requests for things like aluminium and steel. He says Mexican and Canadian automakers should return to the US and that tariffs on China should be the highest and that they may need to impose new tariffs on allies. Says the US must be able to sell American autos in Europe. And that was a vein of form he continued. What do you make of that, Kay? It sounds like he's going to be wearing the bad cop hat.
Yeah, quite a few of Trump's closest entourage are hardliners, right? So that is still keeping us, the whole market, on their toes. Who is he going to listen to? Is he going to listen to those people who just want to play really hardball, or is he going to listen to people who have probably made some calculations of what it all may cost and what it may cost to the U.S. economy, or as well on the relationship point of view, is still an open question. But if it depends on Trump's closest entourage, we're in for a period of hardball. So that is kind of clear now.
Yeah. I mean, Galaxy says that was why he was chosen. Absolutely, but
yeah,
you have to remember that if Mr. Trump doesn't like what you're selling, he's quite happy to get rid of you as well. He went through enough people in his first term, if you remember. So you can't just say, "Yeah, he's picked him," but it doesn't mean he's going to stick with him.
no, that's true.
Around. Yes, mate. Sorry.
No, I was just confirming what you said.
Yeah. And so have we got a plunge protection team in place yet, like you did last time, the old band? Or
I haven't seen any.
No, maybe that's something we'd have to wait for, the old PPT. Biden didn't really have one, not that I recall.
Biden didn't need one in the end, no?
No, that's true.
He had Powell. And then he had Powell, and then afterwards he had a lot of help from the American consumer.
Yeah, that's true. That's very true. Well, let's see if Trump puts one into place, if we get any stock market wobbles. Right, that's that with the news. So we've got the ECB upcoming today, and I just want to bring your focus quickly to something irrespective of what happens today, what's said, and whatnot. The ECB are expected to cut rates 25 again today. That will take the deposit rate down to 2.75%, their main interest rate down to 2.9%. Now, if you remember when interest rates were rising, I said that when they eventually start getting cut, they're not going to be cut too far. We're not going all the way back down to zero from where we were before. So it's where rates are going to settle. We are getting into the ballpark closer to a neutral rate. Okay, all central banks are getting, or the majority of central banks are getting into that, towards that sub 3% mark, where they are going to be looking to park rates up for the foreseeable future. Data playing ball, of course. So this is behind some of my thinking. The ECB is now getting under 3%. Their neutral rate might be 2.5, even near 3%. Okay, so as much as we're seeing weak economies in Europe, okay, the ECB have a potential target to take rates to. This is where you may lose some of the dovish input, because if the ECB are going on cutting, if they're going to cut 4 more times this year, they're going to potentially be getting to the very, very low end of their neutral rate, maybe even below it. And that's possible, of course, but you've got to look at it. Rates are now getting to a point where central banks might want to hold up. So I think, as I've been saying for the last few weeks, I think there's going to be a bit more of a bum fight at this decision from some of the members, like Corky Holtzman, that we've already heard about, who potentially wants to pause already, versus those who want to keep going. So I think it's a low chance that Lagarde indicates any sort of pause today, but there may start to be little inclinations that at some point they will be getting to a level where they might want to stop, and that might not be too far away. So what that will do, that's going to end this expectation phase for rate cuts. The next trading phase will be, can they stay at neutral when they get there? Are they going to have to cut more? Are they going to start raising rates or whatever? So we're about to switch trading phases. Remember, we trade expectations, not what they are doing. Okay, and so the next expectation trade is, can they stay at neutral? And that might start creeping into their thinking. So yeah, for me, a cut as normal. Probably no real change to the language, but if there is any hint that they're getting closer to potentially getting to neutral, that may give the euro a little bit of a lift up. Otherwise, else we might just continue to creep down on this new divergence opening up between them and the Fed. Overall, for the euro, I'm not expecting any big moves. I hope we get big moves, of course, but I'm not expecting any big, massive range breaks unless we do get something shocking. Kate, what are your thoughts?
Yeah, I think she's also going to send us to into that same waiting room that everybody is, to know what's going to happen, because they have to reference again the weak growth in Europe. Although she could hide behind Spanish, behind Spain, and say like things are
Yeah,
not as bad overall as or everywhere as people may think it is. But yeah, I think she will need to caution again, because the growth is not good, and if there is trade wars also coming, it will worsen, and that I reckon is going to keep her on the cautious side today. But she could say like, we are to come back to what you were saying. She could say like, we are done for now, because we have lowered the rates because of the weak performance of the pan-European economy. Now we this bit is done now, and now we are going to look out to what is going to happen next. That is a possibility, and she'll probably turn it into a story, a lawyer story, and putting everybody to sleep after 15 minutes.
yeah. So I think probably the bigger question is De Guindos going to speak this month? First meeting of the new year. Are we going to get something from him, do you reckon?
I'm sorry, Ryan, come again?
Is De Guindos, is Penfold going to speak this to kick the year off?
If he speaks,
Didn't
the
we
euro
open
dollar
up?
goes to 150. If he speaks, the euro dollar goes to 115. I mean, that is the most positive thing you could imagine for a euro if the Windows is allowed to say a word.
I am really closely considering opening up a Cowshy market every ECB meeting and doing a market on whether he speaks or not. As long as I can be the broker in the middle, I'll be a millionaire. Right, let's get into what's going on in markets. Oh, I'm in a weekly. Look at that. Must be moving around. So we'll start with euro dollar. Let's go on to an hourly. Might be a bit cleaner. We're still keeping to this uptrend, but we're looking a little bit weaker. If we're getting below, well, we're heading below 104 already. If we're getting below this zone again, then we're really looking. This is going to really look like a proper dead cat bounce. You know, bear flags may be in play already for those of you who like waving such things. But you know, whatever happens on the ECB, if we come down and test this area, that might keep this rally going, and then we get another move up at some point to 105s. I still don't think we're going to see anything that's worthy of an outright collapse. So if we're down to this sort of area, below 103, down to this little zone here, I might think of picking something up there, maybe even down into the lows there, but that's probably wishful thinking at this point. If we get a 40 pip move over the ECB, we might be lucky for that. Resistance, just stepping down a little bit under this zone here from 104.50. We're now seeing a bit around 30s, 40s, that sort of thing, but it's all a bit creepy, slowly catchy monkey at the moment. Dollar yen, that's had a move under 155. We had the break, it then held. Now we've had another break again. Bit part maybe some positive vibes on that Trump Shiba meeting, also that BOJ story, but we're doing nothing at the moment since that move. We had that move on Monday, that washout move down to that 50 level, 153.70s. So that's going to be your main downside marker from this point. No real test of that 155. So that's what I want to see. Is 155 going to start resisting, or is this going to be just another short-term move underneath it? So if we do start resisting there, then we're probably going to head a bit lower, maybe then look to set up a bit of a range from that point. But as you know, one headline, we could be up at 156 pretty quickly thereafter. Cable, quick look at that. We're messing around this 124.50s area again. It's been an on-off level, goes way back before now, but we're just messing around. And as I just mentioned in the room earlier, with cable, when it's not doing an awful lot, it tends to respect the double O's and the 50s. It's doing that here. This week, Friday, we tried 125, couldn't get through, had a break, failed. Tuesday, couldn't get through, downside 124. We nicked under it yesterday, couldn't stay there, back above. So really your levels are looking around the double O's and 50s at the moment. But again, this one is keeping the trend better than we're seeing in some of the others. Like I've just shown with euro dollar, that might be looking like it's breaking down. Cable, not quite yet. Aussie dollar, that's looking like it's breaking down. As you can see, where is all me moving averages gone? Oh, there we go. That's better. So again, those of you like trading flag patterns, this will be a bear flag that's currently now playing out. You pick your poison where the bottom of that pole is, somewhere down at the 55s or something. But anyway, this looks like more of a breakdown than we're seeing in some of the other dollar pairs. We're going to see, obviously, a bit of support coming into the 62 figure, and then we're looking around this area, 60s, 70s, 80s below against that prior low there, and then anything under there, we're looking back down to that low. Again, a lot of this is probably a bit more to do with these change forecasts for the RBA, just putting a bit of pressure on. And as I say, I still think there's a risk, even though I'm short Aussie versus Kiwi, I think there's a risk of disappointment from the next RBA meeting. But anything down here, if you start to see support, might just give it the impetus to see another rally from that point. Okay, time's ticking on, so I'm going to kick it over to you.
Yeah, I'm not going to show too much, but I'm going to reply to Ali, regarding sterling. Ryan just showed the cable, but I think with what we're seeing, and perhaps the expectation as well, and the divergence, as somebody else was, Menking, saying that the big interest rate diversion, there's this interest rate diversion between the euro and the sterling as well, and ECB cutting today may be another nail in the coffin is a big word, but another weight on euro's shoulders. Let's also not forget that we are month end. It's not very clear the signals, but we are in month end, and I am suspecting euro may end the month on a weak note. Everything else equal, obviously. Okay, so everything else equal. And then I already showed this euro sterling, so I rather express any positive sorry view of the sterling rather via the euro sterling than per se buying cable around here, because it's all a bit up in the air for me. The dollar is bit uneven if we look at the various pairs. And I'm not overly confident in the cable, although sorry, I do also note that around 124 cable is beat, as Ryan already said, around the halves and the big figures. It's looking like there is a bit of activity. I'm not a cable bear, but I prefer expressing it right now through euro sterling, because I've also seen this overlay, and the weakness in the sterling seems to have dissipated somewhat that we saw in the early part of the year. I haven't seen anything in the data to really go big in any position either in the sterling, but it looks to be like a little more safer place, I would say, than doing a cable right here and now. Um, what are the other questions? We need to look at the metals, because they are on the move. Okay, they are on the move. Yesterday, I was wondering whether we could be seeing some head and shoulders formation in gold coming up, but therefore it should have stopped around this 2765 level, which I also highlighted before. And nothing of the likes is happening. It is pushing through, probably due to lower yields, probably also still a hedge about against what may come, as I was saying already. Do you really want to stay short gold if there is still that big tariff risk, especially against China, for instance? The Chinese probably still wanting to be in some sort of a hedge against what may come. And the other one, and that's actually an opposite of what we may expect if there's big tariffs coming, is here the market is rather trading that, well, the slightly lower yields as well, but also trading the fact that it may all not be as bad as it could be. Because silver now is trying to break this zone here. It's already a bit higher than the prior highs. I got a level here at 3107. We are turning around. Okay, so if we see a break here. It could be month end, it could be ahead of the weekend, and then on Monday, I don't know where we are going to open, whether it's somewhere 3180 or back down to 30 and a half or below. But it does look like the market is perhaps like playing a bit the both cards. That is a hedge in gold, but a positive kind of thing in thinking in silver. So that is what's happening now. So we have to, I guess, this next week, even if it looks like we could pull a bit higher before this week is over on positive hope. But it's next week is going to be an important week, in my opinion, for silver. Once we will know a bit more, hopefully, on what Trump is planning to do. I think Ryan already showed the Aussie, and if you look at the Kiwi, it's exactly the same. This really looks like a bear flag as well, and both are hanging on levels where it could get a bit dangerous here. I think in the Kiwi, if you get through 56.30, it could push a bit lower, down to the low 56s perhaps, but in both Aussie and Kiwi, to me, are both still looking a bit dangerous here. They, as I was already saying, they have failed their recovery, in my opinion. Yeah, we are in. We could argue that since mid-December we are also in a bit of a range, but it should make more headway. But again, there will be moves coming next week there, I think. Um, Anyone? Dollar CAD. I haven't traded dollar CAD for a while, and I really want to wait for what's going to happen this weekend to really pick a side, Ali. Yeah, Ryan already mentioned levels a few times in the dollar cat, but to me this is one range, and if you play it intraday, you probably have levels in between. But for me, there's nothing to do between 144.70 and 143.40 really. This is, to me, this is now waiting for what is to come, and the market is at the same level as where the Bank of Canada and everybody else is waiting for what Trump is going to announce on Canada, on the USMCA potential. So I'm not going to. Yeah, there's if you look at it on the shorter term, there's probably a bit of a trend line here, right? Here on the hourly or so, but. Yeah, I mean, if you want to play this short-term trend line holds, we could go back a little bit higher. But if it breaks below 144, the figure is probably no use to continue to have too much in this for the short term. The more medium term will probably be decided over the weekend or the next sessions. And with that, Ryan, I'm not expecting much from Lagarde, but I only can note that the euro is not standing up and growth is not doing well. Lagarde is probably not going to tell us too much, but I'm still not a big fan of the euro, and I wouldn't be surprised if we visit 3.5 at some stage or so. And with that, Ryan, back over to you, mate.
Yeah, thank you very much, mate. After the ECB decision, we do get the first GDP number for Q4 from the US. So just keep an eye on that. That can be the most market moving one of all the readings, more so than some of the revisions. So just keep an eye on that. Obviously, jobless claims out as well. I've been keeping an eye on those in case we start to see any of that storm weather problems, fire problems feeding into those numbers. If we do see some wobbles, we'll know the likely reason why. That's that. Thank you, as always, for coming to the Flow Show. Don't forget to check us out on Face a bit later. Michael, last question. If Trump imposes tariff, who actually pays it? That's probably something we can talk about in the room, mate. So just ping that in there. Have a good day, everybody. Thanks, Kay. We'll see you all tomorrow.